Hello and welcome to the live economic and financial markets commentary. This live session will cover fundamental analysis in the week ahead, global coverage of current economic data including major markets news, analysis and events, how to apply the best trading strategies prior to news being released and after. First, I'd like to start the session by giving you some information about me. My name is Ihab Jubail. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities. And in recent years, I have also set up my own trading robot signals and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Now let's start the session. Non-farm payroll on Friday saw a mixed reaction and eventually a weaker dollar. Unemployment held steady at 5.3%, but jobs created fell at 215,000. And it was expected at 222,000. While these numbers are not at all bad, the markets wanted something stronger to signal a September rate hike. The labor markets condition index will warrant closer attention leading up to September's rate decision. So, non-farm payroll gives no excuse for Federal to delay rate hike. So most experts expect that Federal will hike the rate in September release. The sterling pound crosses have suffered losses as Super Thursday turned out to be an affair and a dovish Bank of England. This is not the first time they have made noises about raising interest rates sooner than later before doing a U-turn to send signals of cold feet. We have a chance to trade the pound dollar with expiry of 1 or 2 weeks. If it breaks the support level, as we can see at the chart, the yellow line, a support level, if the market managed to break this line, so expect the market to keep going down. And there are also multiple lower long shadows and last few candles and are seen in the daily chart, and that confirms our suggestion. So I would expect the market to move down and keep moving down. So it will be a chance to trade the pound dollar with expiry of 1 or 2 weeks and to make fall or down option. Australian dollar, for now, it seems Australian dollar is susceptible to further upside as the expectation of a rate cut this year has all but evaporated. Chinese data has been weak of late, so if there is an improvement this week, the OC should be further supported. So I would expect pound OC to move down, and it will be another good trade. So if you look for another trade, I expect pound, Australian dollar, and to make it fall or down option with expiry of 1 week or 2 weeks. We have another trade plan or trade idea, Australian yen. You can see here Australian yen 4-hour chart. And you can see Australian yen is testing some tough resistance below 92.5, the red line in the chart, in the top of the chart. And many not have the legs this time around, given the fundamental threats surrounding the OC and the possibility for further yen strength in the near term. Technically, the pair is looking somewhat neutral with no overlay, bullish or bearish. So there is no bullish or bearish tone for the market. So this may indicate a period of consolidation below 92.5. So if the market will just keep going under this resistance level, so I expect a good trade. In my opinion, we can make non-touch option for Australian yen with barrier at 92.5, our resistance level, and duration of 14 days. We have a good return of over 150%. So we choose non-touch for Australian yen with duration of 14 days. Canadian dollar, large speculators continue to increase their short exposure with the net positioning indicator at its lowest since March 2014. There still appears to be little reason to buy Canadian dollar at present, so suspect we could see further downside in the week or weeks ahead. But the price of oil can help to provide real-time clues as further weakness should spill over into a weaker Canadian dollar. With a relatively quiet calendar week for the Canadian dollar, then Brent WTI overseas currency strength can be our guide. Crude oil futures fell on today in early Asian trading, touching fresh multi-month lows after disappointing data from China over the weekend showed exports tumbled in the world's second largest economy. Producer prices in July were at the lowest point since late 2009 during the aftermath of the global financial crisis and have been sliding continuously for more than 3 years. We have only 2 tradable news this week. Pretty quiet week. This week we will watch these 2 events in London time. Thursday 13th at 1:30 p.m. London time, US core retail sales. and at 11:45 p.m. New Zealand retail sales quarterly release. I will talk in more details about these two news. US core retail sales is usually a good market mover, and with the federal paving the way for September rate hike, this release could either add to that sentiment or provide a bit of headwind. Therefore, I am sure we will see plenty of price action following this release. The forecast for this release is 0.5%. Previously, it was minus 0.1%. And how to trade this plan, this news? Our plan will be to trade this release. We will wait for 1% release or better to buy the dollar, or a 0% or worse to sell the US dollar. If we get in between release, we will need to look at the pre-release market condition and sentiment in order to make a decision, or just stay out of the market altogether. We will trade this news release using after news retracement method. I will pay attention to both headline and the core retail sales figures, but my focus will be on the core figure. And the currency pairs you will choose, you can just use the default pair of dollar yen or euro dollar to trade this news. We will be looking for an after news retracement trade. We will wait for the deviation, and then we will wait for the market to move with momentum first, and wait for a decent retracement before entering the market and buying the option. You can see 1 minute chart for last release, 14th of July, during after the news release. Because we did not get the deviation number, the market followed the pre-release market condition and sentiment, and it kept going up. This was for euro dollar. New Zealand retail sales will be released on August 13 at 11:45 p.m. London time. New Zealand retail sales release is quarterly release, therefore we are more likely to see surprises in this type of release. And considering the New Zealand dollar is in a correction phase, if we get a stronger than expected release, the long-term trend to short New Zealand dollar should remain unchanged. New Zealand retail sales forecast to be 0.5%, previously 2.7%. And you can see how we can get surprises with every release. And the market usually react with good volatility after the release. New Zealand retail sales release is the measurements of consumer spending in the retail sector, as it reflects the strengths of the economy and the strengths of consumer spending. We will be looking for a difference or deviation of at least 0.4% up to 0.6%. That's our deviation, what we will look for from the forecasted number 0.5%. Therefore, a positive 1% or better will be somewhat bullish signal for New Zealand dollar, and a 0% or worse will be a bearish signal for the New Zealand dollar. Our focus will be on the headline release, not on the core release. However, both releases should not conflict or it will be no trade if we can find any conflict. We will also trade this news release using after news retracement strategy. I wanted to remind you, if you missed the webinar or want to watch it again, you can watch it at binary.com YouTube channel or at my website ehabjubail.com. So then I'd like to thank you for attending today's webinar. We will hold following webinar next Monday. Goodbye and see you next time.